In the 202nd Block Talks, we speak with Vikram Arun, co-founder of Superform Labs, who tells us how institutional DeFi user experience can be fixed. I'm your host, Mauricio Magaldi, and this is Blockdrops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption, and are meant for educational purposes only. All right, everybody, I'm here with Vikram Arun, who's going to tell us who he is and what he does with blockchain. Vic, welcome to Block Talks.
Excited to be here. Thanks for having me. Well, I'm a DeFi founder, I guess. Founder of a protocol called Superform. We are an on-chain wealth platform for you to manage your crypto assets. You can find over 1,000 opportunities on Superform for hundreds of different crypto assets across 10 different chains. And generally, our job is just to make your crypto experience in DeFi as easy as possible. And we're cross-platform. We have a desktop app and soon to be mobile app. And yeah, we're just trying to make DeFi more accessible and powerful for the everyday user and expand all this access to people who really need it.
Oh man, who doesn't love good DeFi user experience? I love that. But before we click there, maybe a better question than who you are is who you were and how you got here. Because I was going through your profile, and it's very unusual from a founder perspective to have such a diverse background. Can you walk us through early days and how you found crypto and what kind of crosses over from your previous experience? Because I think it'll be a very interesting story to tell if we look like who you were and what you didn't do with blockchain.
Yeah. So I guess I can go. My start with blockchain started. It was 2017. A lot of friends had was finishing up college, and friends were getting into a bunch of um, new development projects around some of the phase early stages of those projects in IOTA and EOS, and before right when ETH was kind of catching a lot of steam. And my what I found over that summer was Ethereum, and I got involved in a lot of those the first generation really of AMMs on IDEX and Fork Delta and Ether Delta and all that kind of stuff. And it was just a really fun time being on chain, and that kind of translated into me kind of running a research and trading shop with a couple of those same friends. And from then on, it was really just encapsulated by the possibilities of what like free permissionless markets on chain could actually do if they were used properly. Back then, I was 21 years old, and I was just having a good time finding out what all these different tokens were and everything. But in the bigger sense of things, I think it was really just a time to figure out what exactly Ethereum was capable of doing, and that kind of led into an experience where translated a lot of that whenever Uniswap was getting really popular during DeFi summer. Took a lot of those initial learnings building on those protocols to go do that at an actual fund. So was running a lot of like DeFi high frequency trading strategies across Uniswap, other AMMs, centralized exchanges, all of that at a fund called Block Tower. And yeah, a lot of like the experiences we had at Block Tower kind of led me and friend Von Blake, who were we were running the DeFi strategy at Block Tower, to actually go and start Superform. But pretty much we saw that there was a bunch of like really cool infrastructure being built that actually was going to finally make consumer applications possible. Whether it was interop infrastructure, it could have been smart accounts, all that stuff. But people were finally able to build cool apps, and we just thought that it was the best time to kind of move from that VC mindset, just looking at DeFi protocols to actually go and try and build something.
And before that, I noticed you were in the health science space as a researcher. Um, how do these things connect, if at all? I mean, this is a unique background when it comes to builders, and I would love to understand, what from that era of your life you were able to translate into DeFi or crypto or not? And how does an interest shift so much from that space? Obviously, I think the ICO boom was like, we have to pay attention to this, but it's a big shift in terms of, career and, focus. I would love to understand that process.
Yeah. Uh, I think the overlap is just that there's a lot of really cool new technology that every so often just appears, and sometimes it's easy to be a part of it, and sometimes not so much. I feel like has always been the easiest new movement to kind of be a part of. For me, like the fascination in healthcare was really around like this field in particular that was a telemedicine. It was effectively, using our phones and smartphones and all these apps and medical devices and imaging and everything to try and do what was an archaic industry, which was, just traditional medical equipment, which you have to pay millions of dollars for, only doctors can do. Um, and just disrupting that through very basic like smartphone attachments and things like that. So yeah, I mean that was a good part of my life, and my initial like uh, interest, I guess, in emerging technology. But I feel like the exact same thing translates to DeFi. It's just or just generally what people are building right now in crypto is they're just these old institutions that are currently not being built, or they don't appreciate new technology that's coming around, and it's a huge opportunity for people. And eventually, it works out to the benefit of everybody, even those institutions, because if you saw how hospital systems have reacted to telemedicine and everything else, it's actually now a very critical part of how radiologists and primary care physicians actually like will go and interact with their patients, right? Like they have all these apps now. They regularly talk to the patients, especially elderly patients. Same thing's happening right now in crypto. It's just that now we have traditional finance institutions. They might be adopting on-chain technology for their own back end, effectively, right? Like they can now issue these products on chain and benefit from global settlement, lower transaction fees, all of this. So it's really just like an upgrade of the infrastructure, right? Um, and yeah, excited for like a lot of those announcements to be coming out over the next year. But I think it's absolutely the time of kind of this melding between the TradFi shops and what we have built on chain.
Yeah, I think the headlines are telling that story. But as a founder, it's likely you've spotted problems that were unaddressed. And even though we can say, oh, the UX issue on DeFi is big, as a founder, you can't solve everything. And you might end up solving the thing, but until you find what the thing is, you're gonna solve the thing that bothers you the most, I believe. Um, so what was this trigger? What was the initial laser focus that brought you into, okay, no one is looking into this space. I think I can do this and I can do better. So I'm going to just do it. So what was the trigger point? And tell me a little bit about the process of setting up shop and then actually tackling that.
hmm I think the trigger point for me was just look, we were managing funds. It was like a $150 million fund at Block Tower, managing funds across 20 different chains. We were being trusted by LPs, managers, like uh, clients, really, to go and do this for them. When realistically, like if DeFi had prioritized um, simplicity and ease of access, a lot of those requirements around there needing to be someone that is sitting in between, just that doesn't have to exist. And a lot of the work that we were doing, we felt should be turned into a product across, this entire like process of search to actually find things, this discovery thing, and then execution, like all the operational requirements, us going back and forth with our back office, middle office, like trying to figure out how many taxes we owed on stuff. Like it was driving us crazy. And at the time, it just made the most sense to instead of trying to tackle this from us building our own stuff that was just going to be used by the fund and potential clients. It was like this should be something that is actual public domain infrastructure that everyone in DeFi would be able to benefit from. But yeah, to answer your question, is a 3 years painstakingly of trying to manage an institutional DeFi fund, and then realizing that this actually needs to be solved on a much deeper root level on actual DeFi protocols.
I love that. I love that. Now you touch upon something that it's usually the talk of the town when it comes to protocols and infrastructure is like, oh, we built the infrastructure. We've been building the infrastructure for 15 years now. Where are the apps? Where are the why are we not solving for retail? Why are we not solving for corporate? It's you just use an expression that I think I subscribe to, which is we're replacing the infrastructure on TradFi by DeFi infrastructure because they can't they can't they can't do this. I think there's banks that have been replacing quote unquote their COBOL backend for decades now, and they just can't do it. And now we found an infrastructure that can actually propel and quantum leap from whatever the hell they had to this new era. And obviously not everything we read is accurate and is true. So I want to hear your take. You're building utility for DeFi, institutional DeFi, improving the fund management user experience because people think that infrastructure is B2B, but between the B2B, there's an actual person. So there's a C somewhere, right? That one that buys the idea, the other that buys the software, and the one that really operates the business. Um, what is your perception and opinion on the fact that we haven't broken away from infrastructure yet? And is this something you also understand as it being the case? Do you solve a portion of that through what you're building? And maybe more importantly, how are people deciding to use the things you're building?
Yeah. Uh, there are all kinds of different infrastructure in what we've built, right? And the user is actually the end part of sure what we're building to, but the requirements of the user, the things that they might be interested in on chain, all that stuff's constantly changing. So we just go through these cycles of having infrastructure and then building apps on top of it, and then we realize that the apps actually like aren't solving what that core end user requirement is. So then we build some more infrastructure, and then we build new apps on top of it. So we go up and up and to the right, but certainly I think where we are right now is we're the closest we've been to actually solving the mass market user pain point, which is just like how do I get money on chain and what do I do on chain? But every time, right, every cycle, like in 2017, it started off with really just a bunch of, a smaller subset of traders and cypherpunk punk nerds. And then, 2020, we got some more mainstream adoption through these people that were interested in DeFi, and then this last cycle we got people that were interested in like the culture movement right behind crypto, and then whatever's going to happen next, I think, has a pretty good shot of kind of combining the best aspects of each of those cycles into something that everyone can find their own home in. And that's being driven really by, I think, a combination of this new wave of infrastructure, which it's a combination of these on and off ramps, right? You see all this big stuff coming out on stable coins, but even on like the on ramps like Plaid, Stripe, Bridge, all those huge acquisitions. You have fintechs now that are either building their own stable coins or they have their own like ecosystems and rails to better like actually just substitute out their payment backend with stable coins. um, and then you also have infrastructure that's helpful for the end user in the form of like smart accounts and stuff. You never have to like actually create your own seed phrase, EOA, all that stuff. You're not going to be remembering 12 words on your that MetaMask flashes to you for 5 seconds anymore. Um, People are kind of leaving hardware wallets. There are alternatives now to hardware wallets if you want to have like a safe wallet set up right there. NPCs, there's all this institutional level um, wallet setups. So yeah, I think we're just in a. It's now finally possible, really, for that infrastructure to support what I think the vast majority of consumers care about. Um, and that's exciting. But there's an infinite amount of like DeFi infrastructure also that's been built that is actually leading toward there legitimately being able to be, I think, trillions of dollars on chain. Previously, like we've been so concerned with like smart contract hacks and all this other stuff going on. But now we have pretty efficient, whether they're yield aggregators, they're vault managers, whatever these contracts look like, they're way more battle tested than they were 4 years ago. And I think that people knowing that their funds on chain are safer than ever will reduce the cost of capital. And that also has incredible downstream effects for actually building consumer products on top of that, what's effectively like yield infrastructure.
To a certain extent, we are entering a stage where there is a minimum viable ecosystem, maybe I want to say, with both the blockchains, the assets, the infrastructure, the tooling. Most of what we call infrastructure isn't really infrastructure; it's more tooling for specific areas of the business. So, and there are different practices in crypto than there are in TradFi, which is a very funny thing. When I started doing more consulting on crypto adoption for TradFi businesses, they're like, "Oh, we have a custody business already. We're gonna do crypto custody." I'm like, "You're not, you're not, because you're not a cybersecurity company. And that's what you would need to be able to perform well in crypto custody." And they're like, "No, what you mean?" So there was a lot of that a couple years ago, and I think now with the establishment of players like Copper and DFNS defense and Fireblocks, and all these kind of enterprise grade software providers for that particular activity that is new in crypto. I think people are now starting to understand, oh, okay, we need to be adults on this too, right? So it's not just, oh, it's the same, we're going to repeat the pattern. So I'm glad we're there. Now, in terms of the way you're structuring, and you've gone through structuring your business, how do you decide where to build and who to build for? I mean, you built for, ultimately you started this building for solving your own previous pain, which is the easy, it's adjacent, so it's easy to spot. But as the business grows, there's competitors, there's new demands from clients, there's new opportunities that present themselves, new chains coming about. I mean, you're in DeFi. We've had Hyperliquid as a recent launch. We had Katana from the Polygon camp recently, that's playing a big chunk of like liquidity, depth into DeFi. So how do you choose what to build next? I think I'm a product person, so I would be dying to understand what the process is for you.
I think every DeFi protocol will be a little bit different here. But like our KPIs are potentially a little bit different just because the ways that, we actually monetize as a business. But pretty much our revenue at some point will come from a mixture of our management fees on and performance fees on the actual underlying yield that is generated. We'll generate swap fees and card fees in the mobile app. Um, and then potentially, convenience fees around on and off ramping and things like that. So for us, like the primary KPI, obviously for us on a vault level would just be like, the returns of our strategies, and then how much we're actually going to be able to provide a sustainable performance fee to the protocol. Uh, But so normally, like, whenever we're looking at something new, it's like, is this either going to be bringing us more TVL? Is it going to be bringing us more users? Or is it just generally going to like, is there some intangible here that where we can't really judge what the near term impact will be, but it's just we have a good feeling that this is going to be something big, big down the road. So far in Superform, we've mostly prioritized TVL, even though Superform is currently entirely unmonetized. But I imagine in V2 it'll be pretty similar, but we're mostly looking to uh, prioritize like just the public reach of especially the mobile app, and looking to see like what the actual channels are for getting new users into crypto. And it's a little bit tough right now for us to say like, oh, we're definitely like going to be prioritizing video campaigns or social media campaigns, because I think that the channels so far for actually doing that in crypto haven't been very well explored. Um, but I think the people that have done it the best probably are your centralized platforms, your Binance, your Coinbases, and they've been able to sell some sort of vision to people on like Bitcoin self-custodial crypto, like what it means to be your own bank, that kind of stuff. So probably like a very similar um, priority for us is like we're building things that further that narrative, really.
We're living what someone called the stablecoin summer. You alluded to stablecoin just now as well. Just to pick your brain on this, do we need this many stablecoins? They are not built the same. So there are different models. I mean, there's the centralized issuance model like Circle, Paxos, and whatnot, even Tether. There's crypto backed stables like Sky, former DAI, MakerDAO. There's this decentralized issuance protocol like M0, which is fairly new in terms of model. Um, I mean, you're in DeFi. Stablecoins are part of the bread and butter type day to day operating DeFi. So, what's your view on the stablecoin summer? There's a lot of institutional interest. The Circle IPO was obviously an important milestone, sort of a coming of age to stablecoin issuers. Um, but also the macro's changing. All of the underlying bonds that back dollar pegged stablecoins, they're not going to last if the world goes sour, and risk zero is not risk zero anymore. So how do you see the archetypes, the evolution of stable coins, short, medium, long term, and how, if at all, they affect how you make decisions in building more and into whom?
I'm sure it was a good amount of people would have said something like this last year, but I thought it was pretty clear last summer that we were due for uh, American government, let's say, but there to be political reasons to start to support stablecoins across both sides of the aisle. And my thesis then was that not only are we going to see um, a lot more stablecoins being issued, but we're going to see there really be like a race and a fight around winning users of your stablecoin through your particular app channels. And it's been really interesting to see like this evolve real time, like Bridge's relationship with Circle, for example, right? They used to just use USDC, and now they launched their own USDB. Uh, I don't think that we're even close to the peak of which, of stablecoin issuance at all. I think they're probably around like $250 billion of stablecoins last time I would have checked. I think it's totally reasonable for there to be like $1 trillion of stablecoins in the next 2 years. I think it's like explicitly a priority by Besant and some other people. I think um, and the Treasury to like actually increase stablecoin issuance to be more popular than even Bitcoin, and that would put stablecoins at like a couple $1 trillion over the next call it 4 or 5 years. I think most of those new stablecoins, Circle can only get so big. I think until like not only would there be um, uh, just like competitive pressures around their offering, but just like how much can they actually scale off of just being like purely a payment rail, right? Um, Stable coins are gonna, I think they're gonna need to do a lot more in the medium term than just be payments. But it'll be interesting. I think some level of like government regulatory capture for sure can result in just payment stable coins being accepted, for example, between banks, and then that'll be enough for trillions of dollars of volume. It's tough to say. But to answer your question more directly, like short term, like I think there's going to be a bunch of stable coins. M0, you brought that up. Like it's extremely easy now to actually go and create your own, add your own utility. If you're creating an app, whatever it is, there's no reason for you to not try and like, create your own uh, collateralized stablecoin of your own user deposits, whatever it might be, right? Um, Medium term, I think we're going to kind of like go through a little like S curve, and it's going to slow down a little bit, but mostly shake out around stablecoin issuers that actually have like a sustainable moat, right? They have a good user base. Uh, and it's not just that they're competing on yield, but they're competing on distribution, just non-monetary factors. And then at some point, long term, I think we kind of revert, goes full cycle, and they're just like, four or five probably. Who knows? Just a much smaller amount of things that are actually used, and those are like shared among all applications.
So, not trying to, poke around to find an alpha, but is a super form stable coin in the horizon to a certain extent?
So we currently have super products for individual stablecoin issuers. So we have like Super USDC is actually our most popular product. It's optimizing yield across lending and borrowing protocols like Morpho, Euler, Aave. Um, and we're going to be launching those for practically every issuer that we can on new chains. Excited about some of those announcements, but we'll have those pretty much for most new issuers that are coming out. Uh, and then we'll have one product that is Super USD, but it could broadly be any pegged asset. It could be Super ETH, Super BTC, whatever. And that is an entirely decentralized product where people are effectively supplying the underlying stablecoin to that, and there are incentives to actually rebalance it to governance supplied weights. And these are really like omni-chain savings tokens, is I guess the tagline for it, but you can supply collateral on any chain, and it's effectively like an index of the best stablecoin yield across those chains. Now, we have to be very careful. I don't think that we'll see. It's more of a stablecoin product than it is a stable coin. There are going to be lots of like different downside protection. Like if a stablecoin in there loses peg, there will be like circuit breakers and rebalancing mechanisms to make sure it's safe. But it's more of like a stablecoin yield product than a stablecoin. I'd say now. But
Interesting.
yeah.
Okay. that's that's nice. Yeah. I mean, the amount of compound innovation we're seeing in crypto, it's really unlike anything else. The speed and the degree of how these things move the needle forward and set new trends pretty quickly is really something else. Um, in terms of the industry itself, um, we've come a long way. There were many recent um, coming of age moments in the industry, but we're not widespread, right? The revolution's here, but not evenly distributed, or whatever the buzz is for the week. What is, in your opinion, the one thing we must solve right now as an industry to avoid working another decade or more, and then realizing that we didn't solve that one thing, and then we are back to square one? What would be that one thing and why?
Man, that's a fascinating question. In almost every dimension of crypto, there's probably something that I could say for it. It's almost impossible to choose one. Um, I was going to say culture at first, but I think culture is something that can solve itself after we see a little bit of success in what we've been building. I would hate for crypto to turn into like just a financial mechanism, but I think we see success here, and then we kind of can come back to everything else that we want this decentralized economy to do. I'd be concerned a little bit of like, regulatory capture in that entire scenario too. Okay, I guess like keeping it more to like the train of like what's actually matters over the next 2 years, though, I think um, there needs to be a more effective way to price risk in contracts, and it actually goes beyond just like insurance and stuff like that. I think it's more. Uh, the cost of capital right now is so high in crypto because there's been so many exploits. And for someone like if you're in crypto, you actually don't even want to allocate to most of those pools unless you're getting like 20% or something, and there'll be like some it's just the barrier for someone. And then God forbid something. We tried last cycle, right? Trying to get normal people involved, and then everything just blew up in our face. BlockFi, Celsius, Terra. And I just hope that we don't push the envelope too hard this time around too. And we have to be very careful about the products that get adoption this cycle, and make sure that they really do meet the bar of these being properly managed on-chain products. And it's actually fine. I think it's fine if those products are centralized. I don't think that's the issue. I think the problem is mostly in um, poorly managed centralized products and improperly designed decentralized products. Um, so have to be like very careful, because I think like the ability for us to for this to go wrong and have the effects be catastrophic. Like we can't. Last cycle, it was mostly just popular like celebrities and that kind of group that ended up aligning themselves with the wrong things, and then that blew up. But this time around, they're like governments. There are real like huge parties that are really putting their entire weight behind this. And um, I think the what's at stake now is pretty significant. So I'd want to make sure that we get the risk management and like these frameworks right for shipping good secure code, and also like having there be good and healthy like public self-policing of the industry. I think that's going to be really important.
Yeah, I like that you touched on risk because um, I have yet to see, especially on the restaking space, which to me is an incredible mechanism of incentive alignment, which is who we are as a species, right? Um, but it feels that restaking sequentially, I restake this, I get a liquid stake token here, I'll stake this somewhere else. I'll get another liquid stake token. And then I'm doing this to me because I'm old and I was here when 2008 global financial crisis happened. That to me feels like, oh, we're wrapping risk again, one on top of the other. And there's no way to unravel it and measure this. Like, who's solving for this? Because now we have the data and the transparency to allow us to do that, but who's doing this? So I'm with you. I think there are many risks. There's new technology risks. There are regulatory environment risks. There's malfeasance risk that you just described from the previous cycle, and there's all these other inherent risks of the new methods. But we've seen these patterns, and I think there will be a space, and I fully subscribe to your argument. There will be a space for us to innovate in risk as well. We're just not there yet. Maybe we need an even worse scenario than 22 to really, grow up and go tackle risks like we should. Because I had Itai Tukman. He's a former city global head of FX. He's now building Tomnex. I had him on the show, and he said something that really resonates with me, which is the risk of the innovation should not be the risk of the people using the innovation. It should be the risk of the innovator. And in crypto, because we're decentralized, we push value to the edges. What we're also doing is pushing risk to the edges and not taking, like you just said, we're not taking this into account as we develop. So I understand the whole use of responsible innovation is usually used by regulators who want to stifle innovation, and I understand why they would do that. But as an industry, I agree with you. If we don't do responsible innovation taking risks into account, there are many walls we can run with our faces first on, and that's going to be a really hard landing if we keep doing that, because at some point the world will say, yeah, they can't do this. I don't want to be on that, on the wrong side of that headline.
Yeah, I couldn't agree more, and it's a good quote too. Um,
I mean, Itai is it's just a beast.
yeah, yeah. No, we have all the tools at our disposal to do this right. But at the same time, rehypothecation is in a way, one of the core features of what we've enabled in DeFi, right? So it's mostly about, I think, being very intentional about messaging the layers of risk and uh, doing what we can on a management perspective, so that things are properly handled whenever things eventually we have to assume that things will go south at some point. And they always do. It doesn't matter if you're in the banking system, you could be in any system throughout the history of time. Like there's always something that could go wrong, which is how we respond to it, right? And even if you look at last cycle, like a lot of those things might have been okay. It's just that we should have planned for how to handle, like, if something depegs and like we handle this the death spiral that ensues. Like there would have been good ways to handle it, beyond someone tweeting steady lads," right? Like, so it's just about being more intentional, I think, with what we design.
Absolutely.
Yeah.
Um, as you build your thing and you live in this 24/7 world of blockchains and whatnot, do you do anything to keep yourself healthy, centered? What's your current recipe? What are you trying to do?
I've been a pretty regular meditator. I yeah used to do it a couple times a day. Been great, just kind of like stay mindful of before. I used to try and do it in the morning, but then recently mornings got crazy, so I just try to do it before I go to sleep. That's been awesome. Try to stay active, and just generally, I mean, yeah, there's a lot of, it's tough sometimes in crypto, I think, to think about the stuff beyond markets and everything. But I generally just I found my life to be a lot more enjoyable when I just don't check prices or market. I stopped, really it's over the last year. I'm like, people started messaging me over the last week and they're really happy. And I was like, what's going on? And then I looked at prices, they're great. Like, ETH's almost 3K again, fantastic. But I think that's been the number one savior of my sanity, is just don't check prices anymore.
I mean, we can die of FOMO in this industry, so we better not. If we are the ones building responsibly, we better be do that for ourselves as well.
I'd be curious, like, what you've been doing too to stay synchronous.
I'm a weightlifter through and through. Yeah. Um, I do CrossFit, quote unquote, but I don't do the cardio stuff, so people look down on me. But yeah, I came to accept the criticism. But yeah, I'm a weightlifter more than anything else, and I try to do cardio here and there. Sometimes they will throw a piece of like, oh, we're gonna do a 20-minute EMOM with like two lifts, and like, this is a workout, this is not weightlifting. But I'll play it anyway. It's just a lot of fun. And I do this with my family, my wife, my kids. They're all into CrossFit, one way or another. So it's also good to be with them in the gym and just crack up. It's pretty sick fun. um Listen, Vic, thank you so much, man. This was a incredible conversation. I love your perspectives, and your, hopefully the industry catches up to the type of mindset you're bringing to the industry as well, because we need this kind of responsible builder in the industry. It's fun to see the headlines of people getting screwed because it's not you, but it's not fun if this is all we can offer as an industry. So thankful for having you in the industry as well. How people can find more about what you're building, where you're gonna be, conferences, podcasts, books, whatever. What's the path there?
So you can find us on Twitter. It's Superforum XYZ. I'm also on Twitter, VIK_RUNA. Best way to learn more about Superform, just check out our website, superform.xyz. If you're interested in more of like the technical details behind it, we published our white paper a couple months ago. We're going to be going into testnet with our V2 in the next couple weeks, and they'll be in early access in August. And I'm not sure what the best way to necessarily get that out to your listeners would be, but I'm sure you'll see it on Twitter if you're following us. Yeah, we also have a community account called Piggy AI. If you're interested in finding the best yields in crypto, you can follow that too. Big thanks.
Awesome, Vic. Thank you again, man. Stay well, stay healthy, and hopefully we'll see each other in a crypto conference around the world. Thank you.
You too. Thanks for having me.
Catch us online. We're on Instagram at BlockDropsPodcast, on Twitter at BlockDropsPod or Zerox Mauricio. We're on Lens at blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the BlockDrops podcast at Spotify, iColab, Faberbun Tech, and all of the other major streaming platforms. Yay! Shout out to Vic for such an interesting take on the user experience of institutional DeFi. Also, shout out to Zach Gubner for making this conversation possible. Don't forget to leave the ratings on your favorite player and check out the merch store at blockdropspodcast.xyz. This is all for today. Stay rare, stay weird, LFJ.